Welcome everybody, it's Mind Your Money with Brandon Rogers and Trent Bradshaw. Today is a market update for August 6, 2024. Had some recent volatility in the market, so we're going to talk a little bit about that, what might be causing it, what's the Fed going to be doing. So we'll hit on a couple of those high levels and get right into it. All right, Trent, so again, market was a little shaky really the past couple days, right? We've had a great year this year. The market's return is on point, but obviously had some pullback recently. What's going on?
Well, when you talked about a correction, we've actually had a correction in some of the indices more than 10% in the last 2 weeks. And if you think about that, that's wiped out about half the returns, more than half the returns of what we saw in the market. You know, I think July 18th was the peak that we saw as far as the market's concerned. And then we've had a correction since then. Yeah, jobs numbers came out a little discouraging. And now they're looking at, hey, did the Federal Reserve wait too long to start doing rate cuts and get some liquidity back into the market? Are we heading into recession? That's the chatter we're seeing now, and that kind of spooked the market here in the last 2 weeks. So like I said, we've had pretty sizable correction. It's been pretty violent, honestly, in a short period of time. The thing is, do you panic in regards to that? Well, we step back and we look for the positive things that would be out there. Well, what we got right now, we've got trillions of dollars sitting in money market accounts. When those rates on money market accounts start to edge down, that is a tailwind because that money is going to flow right back into the market looking for higher yields. In addition to that, there may be a surprise cut from the Fed because we're more than roughly about 43 days out until the next Fed meeting, which if you look at probabilities, they're looking at a 0.5 point of a rate cut. That equates to 2 rate cuts in one. So they're looking at a 0.5 point in that September meeting. But we went from 0 probability of a rate cut this year to now 5. So it looks like the Fed is willing to do and be aggressive if they need to be in order to get the economy and the market and make sure back on firm ground and make sure that the engine keeps running. But the thing is, this is a tough call. I mean, Jerome Powell, as far as the chairman of the Fed, has done a really good job. Everything he said and is willing to do, it has happened. He was willing to let unemployment go up. That's happened. So now we're getting to that point. Do they make that rate cut? That's the big question. We're following the Fed. Whatever the Fed does, we're going to follow that move because the market's been historically following exactly what they do. Okay. So what does that mean for the portfolios, Brandon? What have we done?
Yeah. So on the portfolio wise, again, we've all along we've had these buffers in there that again they act as shock absorbers when the market goes down. Right. You're not going to be immune to the downturn, but it's going to help. Right. We still have some of that technology exposure in there. So again, if we see some of these indices changing, you see some sectors getting more looks better than other sectors, we'll make those changes in those swaps when needed. If the rates get cut, financials might do better depending on what's happening overseas. If there's any conflict out over there, I mean, energy can potentially benefit from that. So again, there's a huge picture that we're looking at to see what we need to adjust.
Yeah, and that's that geopolitical unrest that you're looking at. And when he mentioned energy, oil could take off if we have a conflict over there. Oil prices could go up pretty drastically. But you mentioned technology too. We've kept that in there. We've talked about artificial intelligence in detail. We think we're in probably the first or second inning of artificial intelligence. It hadn't even got off the ground yet. Yeah. So to ignore that and say it's over with, that's just not the case.
Yeah. So again, we'll certainly keep you up to date and make changes as we see fit from that end. But again, don't panic, stay calm. Investing is a long term. We're going to have our ups and downs as always. So again, if any questions, any concerns, let's take a look at your plan and put everything in perspective. But again, everything will be all right long term for sure. But again, thanks for joining us. Brandon Rogers, Trent Bradshaw with Mind Your Money, Bradshaw Rogers Financial Partners. Take care. Got your pants down. Yes, what's the date?
6th.
August 6th.
Yeah.
Okay. The battery's flashing.